Okay, folks. It is 8:09. We're starting late today because of a nice lockup in Windows. No matter where I clicked with the mouse, it just made a bleeping sound, and I had no control. The task manager wasn't coming up, so I had to force power down and restart right at 8 o'clock, the time we started. And as some of you have followed in the past, I don't give up easily. So here we are. We're running late, but thanks for joining me. This is episode number 2675 of the TraderBite. Thanks for being here. It is Wednesday, the 20th of August 2025. Looking at a reminder that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's move into what the overall market posture is, and take a look at that. What we have today is we've got a mixed start. The S&P is within 7 points of its break even. The Nasdaq is 53 points. It's about a little over a one rotation, so it's pretty much unchanged, pretty much mixed. The DAX is off 0.56%. Crude is popping higher after yesterday's action. Crude keeps attacking this zone that I outlined on Friday and bouncing off. We'll go over that in a minute. And then we're seeing the metals popping higher a little bit. Pre-market, we had Target, Lowe's, TJX. After the close, we have Salesforce. And what came across that was scheduled pre-open, we had the German PPI come in at negative 1.5% versus negative 1.3%. Month on month came in at negative 0.1% versus plus 0.1%. So pretty soft PPI number there. The inflation rate out of the UK came in at 3.8%, a little bit hotter than the 3.7% expected. 3.6 was the prior year-on-year figure for June. I won't go through the details, through more details than that. We're looking at U.S. President Trump says that Fed Governor Cook must resign now. Fed's chair candidate Zervos says balance sheet is no longer a kicker for economy, and Fed policies are very restrictive. Remember, these guys are really trying to get that FOMC chairman role for when Jerome Powell's tenure ends next year. It's expected that he will not be reappointed. U.S. Treasury Secretary Basant says U.S. has had very good talks with China and that China's biggest revenue line in terms of tariff income, adding that the status quo in China is working very well. ECB's Lagarde says recent trade deals have alleviated but not eliminated uncertainty. Eurozone economy has proven resilient in the face of challenging global environment. There's an MIT paper that questions returns from the AI tech and noted that 95% of the organizations are getting zero return. This really came right before the NASDAQ dropped from around 23,780 and ended up dropping all the way through to 23,430 or something. This big push came in just as that came across the news feed yesterday. Looking at today, we've got EIA crude oil stock change. We're looking for a draw of 1.3 million barrels. Gasoline, a draw of 800,000 barrels. Distillates, a surplus of 450,000 barrels. And then we've got Fed's Waller. We've got the 20-year bond auction for only $16 billion. The FOMC minutes at 2 o'clock. And then U.S. Fed Bostich at 3 p.m. Eastern. And then this evening, South Korea's PPI for July. and then the Australian S&P Global Manufacturing, Japan's Global Manufacturing, and the Australian Consumer Inflation Expectations. Looking at the S&P, pretty balanced profile so far, just kind of rounded. The market has extended the drop from yesterday. We had an impulse, and then we had got the continuation overnight as expected. And so far the volume's been pretty good. The relative range is at 87% for this time versus for this moment versus the last 20 sessions at the same time, the average of the last 20 sessions at the same time. So it's pretty much in line. And the RVOL, the relative volume, is also in line, as you can see, at 99%. NASDAQ RVOL is quite heavier. It's 128%. Other than that, the inventory is 93% short. We've traded basically 93% of the overnight volume below the prior close. The inventory is short, and the range is 29 points, well within the what we would consider normal. Remember, as you could see at the bottom there, the overnight statistics, the mode or the point of control of the range over the last 252 days, which is 1 year of trading, is 27 points. 27 points, we're at 29, so pretty much in line. Other than that, I want to bring your attention back to the Accelerator program, which kicks off September 16th. I'm doing a talk next Wednesday, the 27th. It's linked in the description of the video about the AMA for next week. It'll be held at 1 Eastern. And at that time, I'll talk about the process of learning to trade, right? There's a lot of controversy about paying for something like the Accelerator program, the Accelerator course, or some other thing. When it comes to learning how to trade, we'll talk about that a little bit and address any of your questions. If you're interested in the program, there's the link in your live chat on YouTube to get more information, to sign up, or to ask questions by reaching out using the contact form if you need. Let's take a look real quick, and I think I pulled it up right here. This is from Monday's. Program, and Monday I had outlined that the market has been imbalanced and is showing weakness. And as it says there, the primary scenario is to the downside, and we were looking at some early indications that we are likely to drop into that 64.30. And there is the next tier down would be 64.09, but the 64.30 was expected to be pegged as a break away from this balance. And yes, Brett, we should start these sooner, especially if my computer doesn't crash at 8 o'clock Central, and then we have to start at 8:10. We've been at this for 7 minutes. I can't do them any earlier than that. It's very difficult for me to squeeze them in at, say, 7:45 Central. We can try for that, but we'll see. So anyway, so this is what I outlined as a primary scenario for Monday, but Monday turned out to be just another chop garbage day, just like Tuesday, yesterday it broke lower. Monday was really awful. Didn't go anywhere. And then we ended up getting this move yesterday. We ended up taking out the 64.30. I like to do these post-mortems. I used to do them all the time when I was doing the show every day. We would look at the prior day and look at what scenarios worked and what didn't. Here's what actually happened yesterday. The 64.30 is right here. It's where we ended up settling, is right on top of the 64.30. And we impulsed down. And through. We were looking for these to break. If you look at Monday's video, I highlight these lows. These lows together, one after the other, make what we call a weak low, because we test, we pull up, we test down, and then we make a lower high, and then we make a lower high. And the idea is it's very likely to break lower. It's very likely to, if it's not able to bounce, hit a low and bounce up and then put a higher low, and it revisits that low, this is considered a weak low. People call that a double bottom and they think it's strength, but it's not, because in auction terms, the market will move until it finds an extreme, then it goes the other way to find balance. So the market is a machine that tests extreme to extreme. And if it's a machine that tests extreme to extreme, why is it coming back to the same price? Clearly, it has not found an extreme if it came back to the same price. So we monitor these retests, and we monitor where the profile does not taper, does not dry, the volume doesn't dry up, and instead the profile has a blunt shelf. We call that a weak low as well. So the anticipation was for it to break to the downside, and we got that yesterday. We pushed into key support here, and then this morning, the key level I'm watching, the key over under zone is right in here. It's between 64.18 and 64.23. I'm monitoring for how this area gets treated on the open. If it comes down into it and holds, or it pokes and holds, and I'm looking for a long to play that 75%. Or could someone just, who's on Convergent, go look at that P settle stat and give me a more accurate number? I don't have the market stats report or the quant report in front of me. Just take a look, and I think the number is the historical probability, 75% that we would hit the prior settle if we open inside of the prior day's range. You can see that yesterday's point of control ended up down here. You can see that there was a low volume node here. You can also see that the low volume node was tested almost to the tick and held in the overnight session. We do have a single print right in here, and that also lines up with the prior day's overnight low. So what it's done, what we see here is really, really good structure, right? When the S&P breaks, it's a beautiful product because it's very well auctioned. It's very structural product. It's what's nice about the S&P, what makes it very popular. But when it doesn't break and you end up with this kind of garbage back here, it's easy to get chopped up and to read too much into the action. And those days are wait for setups and they just never show up. So there's no trades. But bringing us back, what we have is a pretty poor low. You can see those two bottoms right there. But what it did is it pushed back up, formed this, this point of control, which again is in line with yesterday's point of control. You can see these the overnight point of control and yesterday's point of control kind of overlap. And what that tells us, and we happen to be in this price zone with the mid and full session, the full session mid and full session VWAP being at the same place, this really tells us that the market has kind of found a bottom. Again, caveat is that we have a weak low. We have this kind of multi-tested low, poor taper. So I'm not surprised, and I'm prepared for this zone to break and for it to push through, poke the 6,400, come back up, put in a higher low, and come back, try to come back into range to bring us back possibly into the 6,430. The most likely scenario, given what we've got here, with the low volume node there, the most likely scenario is the inventory is likely to, the market's likely to pull back into our zone here, the line in the sand zone or the over under zone, and then put in a base and create a setup for a long breakout into prior settlement initially. And then because if that holds, and we get the prior settle statistic, then it leaves us with two more key statistics to play with. And those are, what are those statistics for those who are aware, of the stats that we work with? Remember, we are auction traders using quantitative historical statistics, and we execute on order flow, right? So price action, order flow. So we combine what I believe are the strongest elements, more time-proof elements to put on our trades. So with that being said, it leaves us with the IB stat and the overnight stat. Both of those stats are in historical terms are 95% or higher, 95 and 98% historical probability. So if this holds, then I'm looking for the 75% historical probability. It doesn't mean it'll happen 3 out of 4 times. It'll happen 50-50 today, but over a big data set, which is 700 some odd sessions or 3 years, you have a positive skew or an edge in that statistic. So if it holds, if it goes to the prior settle and the overnight stats untouched, then the key target becomes 64.38. So now we're above the 64.30, looking for 64.38, and the next key area becomes the singles, which represent the overnight low yesterday and the low of the last session, and it brings us back to this key over under area highlighted here at 64.60. So the current range, the current boundaries that we're working with are pretty much 64.20-ish to 64.60 is the balance range. And why is that range important? That range is important because that's exactly the weak structure that we left behind on the break higher. This is all weak structure right down here. This is where the 64.30 comes from. It gives us, we had a pretty good auction that tried to poke and fell off, and then we finally broke up, pulled back to the 64.30, and then we throttled up, right? We throttled up from here last week. We had a big rally, and then we left this poor structure behind. And yesterday, it came and it tried to clean up this poor structure, but it created its own poor structure. So once it takes out the prior settle, then I'm looking for a runner all the way back to the other extreme of that structure, which is 64.60. Does that make sense? So that's what I'm looking for as a key scenario. Again, if it fails through the zone that's highlighted there, then I'm looking for the weak low, the weak overnight low to be taken out, that statistic to be handled, and then a test and a push through 6,400. The target will become 6,400. Anything below there is just gravy. Anyway, the market opens in a few minutes. I want to cover crude. NASDAQ looks pretty much the same. I want to cover crude. Crude's still dealing with this zone after the swing low, still dealing with it. Test, yesterday, test, bouncing off, test. So right now, crude is stuck between the 63.20 and this 61.60 zone, completely imbalanced. You can see balance here, a little discovery, but not much going on. Poor low, the overnight session yesterday, pokes that low, and then today we move up and we form a point of control that's higher. So this is just zigzagging like that in terms of the auction. I'm looking for crude to try to come into this excess. There's an excess high. It's highlighted in your master levels. There's an excess high at 62.80. I'm looking for that 62.80 to hold sellers and for it to come back to the magnet, which is the purple zone right in here. The magnet is 62.54. In crude, I'm looking for that area to just kind of boop, attract prices and bring them back to reality. That's what the auction in crude is showing currently. Sorry about the delay in getting started, and I will leave you with the details on the Accelerator program. No, you cannot learn to trade in 5 weeks. That's not the idea behind the program. The program is intended to give you a foundation for sustainable trading as a professional, and then you have 6 months of access. It includes 6 months of access to everything, and then it also includes monthly catch-ups with the cohort, with anybody in the Accelerator program. In fact, the monthly catch-up is happening today for existing cohorts, and we keep checking in, and you keep learning over time. Trading takes quite a bit of time to learn. It takes a whole hell of a lot more if you did it through YouTube or Discord or Reddit or whatever, because you get pulled in all kinds of directions. Don't forget about next week's AMA. It's in the description. If you want information on the Accelerator program, you can click on the link in the live chat. This is an important program for me because it's how we build community that speaks the same language and has the same approach to the market, a sustainable approach. Good luck, everyone. Talk to you soon.